Now let's talk about time frames in regards to supply and demand zones. But right off the bat, actually, I can already tell you that supply and demand zones will work on all time frames. But let's get deeper into this lesson so you can understand which time frames you should put your most focus on. So from the last lesson of phase 1, we basically spoke a little bit on demand and supply zone, and we explained that demand is a broad area of support. You can also look at it as a level where there is a high concentration of buyers, and you will notice that every time price approaches this demand zone, the price will quickly jump back up, and because of this, you should pay close attention to your candlesticks when price approaches these zones, as these will oftenly confirm your retracements, especially your long weak pin bars, which can be either to the upside or the downside. Once again, you should think of supply and demand zones as big support and resistance areas with a large concentration of buyers and sellers. With that being said, now let's look at the time frames in regards to these zones. Supply and demand zones can be used with equal success on all time frames, as we said earlier, but we will recommend you to focus on those on a bigger time frame, starting from at least the 1 hour chart, the 1 hour time frame going upwards, in order to avoid the noise and false signals that may appear on the smaller time frames. In our experience, we have seen that reliable supply and demand zones are on the daily and the 4-hour chart, and the best way to find these supply and demand zones on these time frames is to look at a candlestick chart rather than the line, bar, or any of the other chart types that you get on different trading platforms. So stick to the candlestick chart, and that is the best place that you can be able to spot these supply and demand zones. A good start for you will be to look and try to spot many large candles in a row, keeping in mind that it's important that price moves with momentum and speed at these levels, and this momentum and speed is basically shown by large candlesticks that we see on our charts, right? And usually they are more so large and one after the other, so basically large candlesticks in a row. There's typically a small sideways movement before a large move. That's where your supply and demand zones are located. Now, as you can see on this illustration over here, supply and demand zones basically encompasses the price at the beginning of the move, be it whether it's selling or is going up, be it whether it's selling or is buying. But you need to understand that it's still difficult to be precise with those levels, and it can be more of an art than a science, meaning that with continued trading and studying, you will become better at identifying these patterns or these zones. The most important thing to look for when identifying supply and demand zones is a sharp move in either of the two directions, up or down, after which you can then pinpoint where it started from. It's quite rare to draw a perfect zone, and it takes time and practice to be able to spot those areas. Best practice is to continue following the rules and practice until you feel confident. That's when it will become second nature and you will be able to spot them more easily. So that's it for supply and demand in regards to the time frames. What you can take out of this lesson is that supply and demand is better spotted on the 4-hour and the daily chart. So let's move on to our next lesson.